finance is the backbone of property. And with a good finance expert, you'll be able to navigate those waters really well. Obviously makes your life easier because for me, it's all right. If you buy one, how do you buy two? How do you buy three? What does that look like? Everyone's circumstances are different. Everyone's scenario is different. I think it's all about tailoring and making sure that everyone's on the same page as well.
Yeah. Today we're joined by Romesh Jayasundara, one of Melbourne's leading finance brokers and a 2024 MPA Top 40 Under 35 Rising Star. Romesh's mission goes far beyond helping people get a loan. He helps them build wealth, freedom, and a future through property. With experience across major banks like NAB and ME, and now as a platinum broker for both NAB and Westpac, Romesh brings clarity and strategy to the often complex world of finance. He's known for turning one client into many through exceptional service, smart structuring, and a genuine passion for helping others succeed. Whether he's guiding first-time buyers into their first step or helping seasoned investors scale their portfolios, Romesh combines technical expertise and helps clients turn their equity into opportunity. Rom, welcome to Invest Smarter, Grow Faster.
Thank you. It's great to be here.
Yeah, it's good to have you behind the microphone. I know we've spoken a lot about our client in common and about the markets over different times, but it's good to dig a little bit deeper into the Rom story and give some advice for a lot of the listeners today.
I'm looking forward to it.
So, mate, traditionally we like to start to ask a little bit about you, get to know you as a person. Why don't you give us the Rom story, a short version of the Rom story?
Yeah, of course. I guess going back when I was young, I saw, growing up, there was only one person working at home. So I grew up in a family where, well, in terms of our culture, mum would stay at home, dad would work.
Yeah.
So barely saw dad as it was. But he was, providing for the family. So we never thought anything of it.
Was that in Melbourne, sorry? Or?
Yeah, so I actually was born overseas and I came here when I was one.
Wow.
Yeah, very young because I think my dad got the visa and then he left my mum to come here first and then she came after.
So get settled, get a job, those type of things.
Yeah, correct.
Actually, my dad did the same thing.
Yeah. And then essentially I think he was part of something to do with engineering, German tech or something like that. So he came over through the, I think, TAFE business or whatever it was. And then, just watching my, really saw mum and what she did and kind of how she cared for me and my brother. And that instilled a lot of values in me to do with just caretaking, empathy and looking after my brother because my dad wasn't there. So I was a role model for my brother.
Yeah.
And then after some time, mum had to start working because obviously inflation, things going up in price.
You guys are in school by this stage, I guess. And things
yes.
like that.
So we were, I was in high school. So he's my brother's 6 years younger than me. So I had a bit of a gap too. And then essentially, parents got divorced and we went with mum. So I kind of got to see mum working full time and being a parent, and that was tough for her, obviously. Being young, you don't really know or understand anything.
Yeah, the word role model isn't something you think about at that age.
No,
but obviously she
to
had
be
a big
honest,
influence,
you only see what you want to see. And I saw a lot of things she wasn't doing as a mum. Even though now looking back, being a dad, I know what it is.
We're all trying our best, right? Yeah.
You're doing your best with the cards you're dealt.
Yeah.
And seeing my mum doing all that, I learned because she did family daycare. She was self-employed and she worked 24/7. So she used to work night shifts, everything, every day, every week, And one thing I didn't know at the time, I learned later, is that she never got advice or support around finance and literacy. She really didn't put money into super. She didn't really understand tax. She'd go to people and then they will, tell her what to do and she'll just do it.
Yeah.
So didn't know this at the time, found this out later.
It happens today, right? You know, in your business and my business, people listen to their friends at a barbecue to
100%.
invest $1 million.
100%. And that's why it's important to, lean on your experts and have that circle around you. In school, I was pretty bright. I was always good at maths and I was really good with people too.
Yeah.
Those were my two strengths. And I got to a point where I think I just was bored or not stimulated, and then I was searching for that outside school and outside. Like I think I was seeking what my mum wasn't giving me, and that role model my dad wasn't. So I was seeking that externally, and because it was missing inside me. And then unfortunately, that led to hang out with the wrong people. Not the wrong people, sorry. It just led me down a path. To be honest, has made me who I am today. And I had to go through that to learn a lot about myself and just life in general. Yeah, I ended up getting a career in banking. So went to did some personal loan, car loan stuff with St. George, and then moved into NAB. But that's where my kind of career really started, was there. Prior to that, there was a lot of hardship growing up.
I mean, banks are a great starting point, right? I hear a lot of people who've gone on to be entrepreneurs or work for themselves or work for others have grounded themselves in a bank, particularly that maybe 5 years or so period. And you get to experience certain areas.
Yes.
Depending where you land, sometimes that might be the career you take off with. Could be like you, finance.
Yep.
Or I've seen other people go into the branch system.
Yep.
Or other people go into the bigger, get out of the retail bank and go into the commercial side where the big dollars are. So depending where you end up sometimes.
There's a lot of paths to take, and it is overwhelming at the start because you don't know what to do. You don't know where to go.
And you're just a number, right? I mean, literally, without being disrespectful, anyone works in a bank, you're one out of 40, 50,000 people.
Yeah, 100%. And I learned that as time went on. At the start, I was just really grateful to have that opportunity because I felt like someone who missed out on a lot of opportunity when I was younger to kind of excel my career further and faster. I didn't get to experience that. So that meant that when I got the opportunity around 22, I was very grateful, and I just wanted to take advantage of that opportunity and just make the best of it. So when I went into banking, it was in customer service, and there was just a lot you learn when you're on the phones.
So that face-to-face with customers?
No, on the phones.
On the phone, yep.
So a lot of people calling in.
Yep.
And dealing with all sorts of inquiries, sometimes not to do with banking. Just kind of, just going with the flow. And for me, I've always been someone who's good at serving people and just being a caretaker. Like I said, growing up, I wanted to always put my best foot forward and help people. And if I didn't know the answer, I just wanted to guide them in the right direction.
It's a great place to start. Even in my first career, it was a call center, and
you learn a lot.
And you learn a lot, and you learn how to appease people.
At the time, you might not think.
No.
Yeah.
And sometimes, you do a bit of training, and in one of the most basic trainings I went to, I remember, and I still do it today, but we don't have a lot of people on the phones, but it got me to put a mirror in front of my monitor. And the idea is you should always be smiling. So every time you forget that, you just say, the mirror, smile. And until it comes out of your voice, changes your mood, calms you down. If the client, normally you're getting punched by the client potentially.
It's always most of the time it's a complaint or something's not right.
Yeah.
I mean, that's why they're calling for customer service, right?
And I guess back then we didn't have the technology we have today, right? With the apps and everything else.
Correct. I think it was still, there's a lot of transitions with the NAB. I think internet banking was becoming a big thing with NAB as well. And, people, I'd have to guide someone on how to log in on their computer, sign up and register for internet banking without seeing the screen. So I have to guide them. And half the time, people weren't that literate with the computer as well. So it was kind of tough trying to guide them without seeing what I'm looking at. But I always felt like I had the patience to get through it.
Yeah.
And one metric that really didn't work for me was it's a metric called AHT, which is average handling time on a call.
Right.
Mine always blew up every time.
You sound like me. That would be me.
Yeah, I'd always get it brought up in my conversations with management and all that. It was, calls was very long.
Yeah.
And then it was just, I guess for me, it was just finding a way that I could do that same level of service, but do it more efficiently. So then I learned how to do that. And then I was rapidly getting through calls, but at the same time giving the service. So I learned a lot in servicing. And then obviously from there, that's when I kind of moved through the chain of mortgage departments in the bank.
So eventually you got to the mortgage department.
Yeah, so I started in internet banking servicing, went to credit card servicing, learned about credit cards and all that, and then went to mortgage servicing. It was actually a really good foundation and base for me to learn what I know. Learn how to service a loan and what, when people call about their mortgage, why they're calling, what's wrong, what's going on. So I learned how to tackle those challenges. And then we had this event where we had the GM of, I think it was, it's hard to say because it's a long time ago now, but there was different departments and they had the heads of, and they've got their managers, the GMs of those departments, and they were down and had I think I won a one-on-one with his name was Paul Borg, and I got 5-10 minutes with him. And I was so prepared because I came with a list of questions to ask him because I really wanted to take my career to the next level. I just didn't know how or what to do. Like I said, never really had a role model. So then after speaking to him, he introduced me to a guy named Jake Little, who was the head of retention at the time at Mortgage. Had a chat with him. I guess he must have liked what he saw, conversation we had, and then he gave me an opportunity to come into retention. So I did the interview. Mind you, I was at Knox at this time, so I was living around Knox at the time. But this was a big change because that meant I had to start working in the city. So then it's, there's hourly commutes back and forth. And yeah, I got the opportunity to join mortgage retention. Back then they were known as a really intense department. Like they just got stuff done. And if you went there, it was a good thing. So I love that. I love challenges and opportunities. So yeah, I just wanted to learn as much as I can. So I went over there to retention, having the customer experience service background, went to retention, learnt retention, negotiation, all that. At the same time, I was put into different programs because they needed help with different departments. So I did a bit of collection stuff. I did a bit of complaints as well. So how banks handle complaints. So I got a kind of broad picture and of experience of how to help a client holistically, not just client comes, puts a discharge form, wants a better rate. It's what's going on in your life to understand so I can really help you. So learn a lot of that at the bank.
Now, it sounds like a great grounding to why you're succeeding so much now in your current career. So let's get on to your current role with Innovate. And obviously you've had we said in the intro, you're quite a fast start to your career there, and also now getting rewarded and awarded in some of the fast ranks. So you often talk about investing smarter, reducing the debt side of and recycling that debt. Can you explain that? What's sort of some of the advice you've got for investors around that side?
Yeah, of course. So when I say invest smarter and cutting bad debt, literally looking at what interest are you paying on any type of finance where you're not getting a benefit to paying that interest, outside the fact that when you buy your home, you got to pay interest on your mortgage obviously, but at least you've got your home, you've got somewhere to live. So that's a great benefit. And I tell some of my clients as well, especially first home buyers, when you're buying that first home, don't be disheartened if it's not that dream house or it's not that property that's, amazing. Because at the end of the day, if you can just take that first step, baby step, get into the property, have, real estate ownership, that's a great start to building your wealth. And why I say that, and I tell some first home buyers, I'm like, see, this is a long-term investment. This is just one of the stepping stones so that you can get into your dream house in the future. And that's where we start talking about equity and long-term and kind of what that looks like, debt recycling, how to use your equity to buy investments, stuff like that.
It's a tricky one, isn't it? Because I had this conversation yesterday actually with an Uber driver on the way to the airport, and I agree. It's a stepping stone, and I'm a bit worried about this whole first-time buy because this is the first time we've seen such a mass opportunity for first-time buyers, right? 92% of apartments are now applicable to this first-time buyers grant across Australia, and 62% of houses. So, if you get that wrong, So meaning you go and buy, let's use a Victorian of Melbourne example, down at South Bank, a one bedroom or a studio apartment there, it's a stepping stone, but is it going to grow ever? Well, that's what I'm worried about. If people just get into stepping stones, which I agree with you 100%, but even just trying to be a little bit wiser around that stepping stone, because otherwise, if that's 10 years of no growth, they're never going to get out of that property.
Yeah, I completely agree. And I think at the same time, it's having that financial literacy as well, and understanding how does finance work, how do banks work, and how does leverage work? Because I think one of the keys to building wealth is leverage, and especially in real estate. I tell clients, you put down 2,000, the bank's willing to give you 8,000. Now you got 10,000. You compound that over more amounts. Something you put 50K into a savings account, you get taxed on that 50K, say 5%. Put that 50K as 10%, for example, on a 500. Just example numbers. That's 5% on 500K. And it's like, what does that look like long term? It's kind of mapping that out. So with the apartment, even if someone, because I never really, as a finance broker, I'm not going to tell people what to do in terms of property, because I'm not the expert there. I know the basics really well. But I tell them to lean on a buyer's agent or a property expert, or someone someone they know in their network, like a trusted professional, outside mates and barbecue chats, where you can really get some proper advice. And that's where I end up doing a lot of referrals, where I can say, hey, do you want to get some professional advice from a trusted professional? You don't have to commit to them or kind of take that step, but at least you'll get some knowledge and value, some understanding.
Maybe things not to do.
Correct. It's just little things. And it helps me as well, because then I don't have to, they come back to me with a one bedroom apartment in South Bank worth, say, 250, 300. Rom, is this a good property? And then I try not to be biased. And I just talk about the facts. So I say, for example, whenever I do have that scenario, I'll say, hey, so this is probably an asset that's not going to give you long capital growth. It might be an asset that gives you high rental yield. However, we need to find a strategy that works for you. And if, with your plan being investing and buying the dream house one day, how do we do that? So one of those ways is obviously P&I, pay down principal, build equity, leverage that equity, buy another asset that's maybe a bit different, not another apartment, for example, or interstate or something, and slowly build your wealth through that avenue. So it's not a dead horse at that point. It's like, how do we manage that? How do we get around it?
I think there's a lot of emotion when you're buying your
100%.
Family home or your first home. So you kind of say, look, this is an emotional purchase. You can't have it both ways. Because if you ask me, I want to buy a family home, but I also want it to be a great investment, well, I may not be buying that suburb. But you need to live there because the kids' school are there, or whatever it might be. So there's always a bit of a playoff.
The lifestyle.
And correct. I mean, we often say in our business regularly, it's a property investing is a game of finance. Because if you don't have finance, we're not talking.
Unless
right?
you got cash.
Yes, you're correct. Yes, and then we have to worry about where that comes from. So I think that's very good advice from that side.
Search Party Property, nominated by REB as Australia's best buyers agency and buyer's agent for 2025. Looking for your dream family home, a prime commercial property, or a smart investment? We've got you covered. Unlike others, we don't rely on selling agents or property managers. We have boots on the ground in key investment cities across Australia. Powered by data-driven insights, we give you the edge to secure the best deals. Ready to invest smarter and grow faster? Contact Search Party Property today for a complimentary discovery call.
Now, in terms of, one of the biggest opportunities and things that derail investors is the mindset. What are some of the things you see that are holding people back, or what are maybe some of the tips you give to some of your clients about maybe changing their mindset?
I try to help my clients understand how much or how important it is to know how the banks operate, and then understand what are the tax benefits of investing. And I talk basics, but I always refer my clients to the professional. So if it's an accountant, I'll be like, how good's your accountant? How great are they? Do they know much about investing? Have they ever spoken to you about it? Ask these questions. No. Oh, it's so,
They're building their team of experts. So
sometimes it's H&R Block, and I'm like, so the H&R Block person you spoke to, is that your accountant? They'll be like, yeah, they did the paperwork and whatnot. I'm like, so do you know that they send that off to someone else who's probably the accountant. I had no idea. Well, you need to speak to an accountant to understand all these things. And then they come back to me later. I've learned so much. Like I want to start now. And that's purely because they understand the benefits of investing. They, the accountant talks about property ownership percentages, positive, negative gearing. How does that work? Trust purchases. How does that, like, they kind of go into detail.
Yeah.
And it helps clients with information so that they can actually take that next step. So they get the clarity they need to take that next step. And I'm all about giving as much clarity and value to clients so that upfront they see me as that trusted expert or trusted advisor. Because for me, it's not even about the numbers. It's about like seeing my mum and what she grew up and all that. It's like, how do I make sure no one goes through that again or go in that same boat? So I'm willing to always give my clients in my first meeting, the discovery meeting, I just give them as much value, as much information as they need, so they have clarity, so they can take that next step.
It's funny. I know we should discriminate against male, female, but often even in my business when we're buying property, like when I see females who just want to get on their own and buy their own property, don't need to rely on it's to me, it's really special. And just to buy that first property for them and see how exciting that is.
Mm-hmm.
And it really then escalates their whole life.
Yep.
Because they'll earn 10, 15% potential capital growth on it in a year. And then they'll say, oh, geez, I can buy another one in another year. And it's because before that, they didn't believe.
Yeah.
They didn't believe they could do it.
Yeah, correct. My mum actually ended up talking to a professional who was able to help her with investing. So she did end up like later on. So she was a lot older.
Yeah.
And mind you, she actually had no super as well. So because she didn't really understand how it all works. So she kind of had to buy my dad out with the property too when they got divorced. So she was paying that down and using equity. She bought something because she was told what to do. And then she ended up buying two. So she got to a point where she actually sold both. Because then that's the advice she got. And it wasn't, it was more around, she just was managing it all herself and doing it and she couldn't. And that sparked something in me to go, there's something here that I'm like, just seeing property grow, like looking at the real estate data back, 2000s, how much they've grown and not understanding anything about finance. I thought this is something that intrigues me and I want to learn about it.
That's where data really paints the picture. One of my favorite slides I use when we go through the data with our clients or prospects, I should say, at that time is, looking at 40-year graphs. Because most people say, Sydney's the only place to buy. Or Melbourne's a dud at the moment because it's, it's taxes and this and that. But if you actually break it down and show the data, there's nothing separating the top 5 cities in Australia over 40 years. It's like 1% between all three of them. Because now, as you know, Adelaide, Perth and Brisbane have a high average house
very hot at the moment
price than Melbourne, which is unbelievable as well.
Yeah, I know. Looking at, before COVID, Melbourne was very close to Sydney.
Well, Melbourne had I think 15 years of 8% growth.
Wow.
Average. The best performing city over that time. And obviously then you've lost 8 or 9% over that back of COVID.
It's been a bit flat for the last few years.
But it's really heating up now. So it's, and I'm sure you're seeing it as part of when people are coming into you now as your business is heating up as well.
Yeah, a lot of people used to, over the last few years, they were only talking about WA and Queensland. Before, at probably early 2020, like 21, they were talking about Adelaide too.
Brisbane definitely was,
And then I think slowly I'm seeing less of Adelaide, more of Brisbane and WA, and now I'm seeing a lot of Melbourne. So a lot of investors are definitely looking back at Melbourne, seeing the gaps in the market and, seeing, like, for example, seeing suburbs less than 30 minutes from the CBD worth around 650. It's nuts.
Yeah, I know. It's unfortunate that secret's out now. So we've been, as you know, buying here for 2 years and it's so much harder now. We were going to auctions and open homes on our own, and now they're packed. There's queues of people lining up. So it's definitely, and there's a lack of stock, so it all kind of augurs well to, if you're a property investor particularly, seeing good growth in your investments.
100%.
Speaking of, government policy has a lot to do with, we just talked about the first home buyers grant, what that's done to the market. It's only been 3 weeks and we've seen the heat kick in. And when I speak to you and other brokers, they're getting really busy. And that kind of generally, there's a percentage of that client that comes to you will then buy an investment property, and a percentage of that clientele will use a buyer's agent. So it kind of goes down the chain.
Mm-hmm.
What are you seeing with some of the government policies that constantly change, particularly in the finance side? So we know we can go as far back as the Royal Commission and saw what happened there. But just in recent terms, have you seen anything that's sort of changed with the banks on how they're looking at things and applications that are advantageous to investors?
Yeah, I would say it's more around the banks are always trying to find ways to, I guess, from a responsible lending perspective, keep that in check, especially after the Royal Commission. So there's a lot we do behind the scenes to ensure that the customers or the client's experience is good, but also we do ask for a lot of documents as well because we got compliance too. So we're going to make sure that at the end of the day, we're verifying and the information and, it makes sense too. Like I always ask myself, would I lend money to this person myself? And if it's no, then I don't want to lend money to you because maybe it's a trust thing, just seeing history and whatnot. I don't judge people. So I try to give them I try to explain. I'm very upfront and honest and say, this is what I'm seeing.
Yeah,
how do we move forward from here? So if they're not willing to change or, they'll be like, oh, just do it, mate. I'll be like, not happening. You need to find someone else to help you. I would say from an investor, it's important to understand that not one bank can meet your needs. And there's a lot of banks and there's a lot of policies. There's a lot of different borrowing capacities. There's a lot of different processes. And not having that experience and trying to do it yourself as trying to get finance yourself, you just go to your local bank, you get told one thing. Being at the banks, seeing how they're trained, sometimes you see bankers getting a month experience, maybe 2 weeks, and they're already on the phones talking to people because of how, volume. And it's like, they're still getting training, they're still getting facilitated. But at the end of the day, you don't know who you're talking to as well, especially when you call the bank. And some, experts or specialists, they might not even have tenure. It might just be, a small amount of tenure.
Yeah.
I've seen a lot of bankers do really well at the banks too. But then again, they're only stuck to one product.
Yes.
They can't do anything else, right? If they've got servicing issues, are they supposed to say to the client, hey, Westpac's giving a better rate, but we're not, a better borrowing capacity, but your goals are these, so you should go there. No, they're going
to whisper in and say, hey, you should try one of the second tier banks because they'll look after you.
Or for them, it's like, how do I win how do I get the deal? And they've got KPIs to meet too. So as a broker, I've got access to all these different borrowing capacities and I can understand and learn where I can meet the client's needs. Also, how to not over leverage because it's really important.
Yeah, and I've seen that with you guys, with different clients that we've worked on, and you really focus on the strategy, as opposed to just getting that loan done.
Yep, I'm very big on strategy,
and that sets them up for the future. And going to statistics again, 73% of Australian investors only buy one investment property, and they get stuck. And so then they turn to you and say, well, how do I?
Yeah.
So normally it's because they bought a poor investment. It goes back to that conversation we had about potentially buying in Docklands or things like that, high-rise apartments, and they get stuck. What, apart from, as you said, the P&I, which is a great tip, is there anything else? Do you ever recommend, might be time to cut your losses?
Yeah, I was going to say that's the second thing, cut your losses. If you're ahead or you can somehow get out of this scenario without getting deeper and digging your hole more, you might as well cut your losses and take that next step. At the end of the day, it's okay to have a loss. Like that's okay, because if you do have a profit down the line, you can look at the offsetting that as well.
Yep.
So that's why it's really important to have an accountant you can turn to and be like, hey, this is a scenario. Like if I cut my losses, what does this mean? And then if I was to use some money to buy another investment and have some profit, and so what does that mean? Capital gains and all that. I think that emotion is what gets people a lot.
So talking about investors, remiss of me, I didn't ask you about your investment journey. I think I got a bit caught up in your story. It was quite emotional with mum and growing up. What about you? Have an investment journey that you can share?
Yeah. I had an investment and I had big plans for the investment. I was going to do a knockdown rebuild to duplex townhouse. Would have been a big job.
Yes.
And
that was in Melbourne as well, I guess.
Correct. And it would have been perfect timing.
And that was going to be a knockdown rebuild duplex, and you stay in one or you sell?
We were trying to figure out what to do. I was thinking of maybe making my current property an investment and then moving into this one,
Okay.
and then mum could live in the one next door and
Yeah,
maybe help
nice.
out with the kids and stuff like that and have that support. Because I'm fully grateful for her and what she does, because I never really knew what it's like to be a parent until you have kids, right? So I'd love to. What my idea was to bring that together, and then with my brother, give him a house essentially. Be like, this is yours. Do what you want with it. So that was the plan we had with my mum. Because even though it was an investment, it was about, it was a bit of emotion there, right? And it's like you learn from that. Long story short, found out that this is not a good idea. And that's purely because I don't think everyone was on the same page. Because it's family and everyone's got their own ambitions, everyone's got their own dreams. So what turned out to be a really fun, great idea, probably going to make us a lot of money, turned out to be a costly mistake. So not a mistake, sorry, a costly lesson. So probably cost us maybe 40, 50 grand in architect fees and, doing all the planning and getting everything ready. We were actually at the point we're going to get stamped.
Wow.
On the permits and approvals, but I had to find out what is the best strategy from there. So that was a big thing to figure out.
Because I know people, sometimes you'll sell the property with the plan stamped and it's all done for someone. They don't have to waste their time doing
Correct.
it.
Well,
that's cost, that's money,
that is. And I had to figure out what do I want to do. So then I had to do a revaluation of my life now. It's like, my family, my kids, spoke to the wife, spoke to mom, spoke to my brother. It's like, all right, well, now I have to mediate this and figure out what I want to do from here. Obviously, we took a backward step there or a sideward step. It was a cost for us, but then it's like, how do I learn from this and make sure that I can move forward? And I also saw it as an opportunity for me to learn how to help clients who are going through developments and doing that kind of thing and what that involves. And, from a feasibility perspective, what does that look like? So I learned a lot there. And then I figured in the next year, what I'm going to do, I got to time the market. I got to do something really strategic, because I believe that it's not about timing the market, it's how long you're in the market. I think that goes a long way with investing. It's not short term, it's very, long term. And I think people have that mindset that they want to make money fast or quick. And it's like, I need to buy in the best suburb straight and get 20% uplift or whatever. But I think at the end of the day, the test of time stands, and it's like the longer you hold property until retirement, the more money you will make in terms of wealth as well.
I think there is the risk appetite as well, and there's a lot of larger buyers agents who work on that theory, which is buy, hold, gain equity, and sell. And that makes sense from a business perspective, right? If I can get you to sell within 3 years and come back and buy another property, it's better for my business.
Correct.
And if I get you to buy cheaper assets, you're going to buy more assets, it's better for my business. But we're on that, I agree with you, we're on that different boat and different channel of long-term investing and looking at that 20-year horizon rather than buying and selling quickly, because no one has a crystal ball.
Yes, correct.
Everyone can pretend to say, I pick the markets by the day. It's never been the truth.
Correct. And I think at the end of the day, having those experts you can lean on, you can actually get really good advice. And what I learned was the property I was living in is actually not the best in the area in terms of, it was a 3-bedder, right? So I'm like, if this goes onto the market in spring, will it compete with the 4-bedders? I'm like, probably not. I'm like, what if I sell it in winter, which is against advice, right? Well, a lot of people are against it, but I thought if I sell it in winter, it's the only 3-bedroom, or there's probably other 3-bedrooms. A lot of 4-bedders will wait till spring. And I'm competing with townhouses as well. So my property looks better, right? Then I thought, what do I do? Because having the finance knowledge, I'm like, how do I secure the next joint with this not being a burden? Because it was becoming a burden the longer I was holding. And I figured, all right, well, maybe we'll just sell off too and buy the next house for myself and the family, so get mum in, try to figure something out. And I could potentially just do it in a way where my own occupied debt is low, but I buy my next upgrade from where I am. And then I thought, when should I do it? Should I do it, during winter? Should I wait till market's hot? Because I knew Melbourne's kind of, at this point, having a lot of experience with clients, I knew Melbourne was getting a lot of talk. And I figured, all right, I'll just go to auction, look at properties. And I found a property me and my wife loved, went to auction. And this was in May. So secured that unconditionally, got a long settlement, because obviously in the industry we know what to do and how to mitigate risk. Got a long settlement, then put my properties on the market during winter. And thank God it all timed out perfectly.
Yeah, nice. No, it is good timing because, I mean, you trying to buy that property today.
Oh my God,
Be
it's
very
gone
different.
up a lot.
Yeah.
It's gone up a lot.
Mm.
And look, everything went up, right? And
Yeah.
look, to be honest, we were conservative. We didn't get the prices we hoped in terms of aggressively, but where we landed was really good for the market. It was.
Yeah, you might lose a little there, but you've gained the asset, which is your family home now.
And we're talking long term.
Yeah.
So I think like, and I want to do it in a way where I wasn't too greedy and holding and buying something with high owner occupied debt, because that's bad debt. So then I wanted low bad debt, got rid of a few assets there, and then essentially the plan from here, it's like, all right, well now I've got a bunch of equity I can play with, right?
Yeah.
Where do I go? What do I look at?
Yeah.
That's where I'm at now.
That's the next strategy.
Yeah.
So sounds like you got a lot on your plate. You just told that story now. You just bought a family home. Mum's moved in with you. You've been very successful in the last 12 months, particularly with your business. How do you divide the time and balance that time with obviously 2 kids?
Yes.
As well.
In 4 months, they'll be 4 and 2. So still going through that.
A very busy period.
Yeah. So with that, we didn't have a lot of family support. So we had to do a lot of it ourselves. And I think growing up, seeing dad not there kind of gave me the direction to be there for my children. And with mum, I saw how to be a good parent. And like at the time, I know that she was doing the best she could with the hand she was dealt. And I felt like my hand, the cards that were dealt to me were better. So I got to take advantage of this and use that opportunity to help me grow my family and have that, balance. I think as a high performer, it's very easy to be unbalanced, and you got to be very mindful of where you're putting your time and energy and what your priorities are. I think having too many priorities will unbalance you very fast, and it's very easy to start going into a mindset where now you're like, why is this all happening to me? Why is it so hard, But at the same time, because I've been through so much hardship, I knew at the other side it was great rewards as well. So I felt like in the last 12 months, the difference I made was I made a choice to embrace the suffering and just embrace the hardship and say, you know what? Every single day, there's going to be a different price you have to pay for the things you're going to go through in that day. And as long as you get through it and you do your best and you don't put yourself down, you keep going, make progress, it's going to get better. And I just believed. I believed in myself, and I believed that if I was headed towards this way, gave my energy and time, the world will give me what I want as well. And I just had to believe it. Even if it didn't give me what I have today and where I am today, it taught me a lot in terms of like, I thought I knew patience, and then you have kids and you're like, wow, okay, this is patience. And you realize quickly that you can't be selfish. You have to be selfless with your family. And there was a lot of lessons and a lot of challenges I had to overcome. But I think one of the main things I've realized, it's mindset. It's all comes down to mindset and how badly you're willing to suffer to get what you want as well, without compromising or sacrificing what you love or your values. So for me, my 2 priorities are family and work. And social, that's a cup to fill. I get that at work. I love the culture and the people I work with. I think they're all awesome, amazing people, and all high performers like me as well. So it's really good to have that around me. So I feel like my cup's filled there. And then I've got my long-term friends I can always lean on and talk to and, hang out whenever I want to. So it's nice to have that there too. So I guess for the next 10 years for me, it's all about how do I put my family and my career in line without sacrificing one or the other, and being the best dad and husband, but also the best at my job as well.
No, it's wonderful. Strong mindset, and I guess always recalibrating when we have to. And sometimes I found regularly, right, with 2 kids as well, sometimes it goes out of balance.
Yes,
and
100%.
If you've got the support at home, I mean, there've been times in the recent years, I'm eating my dinner at my desk at home regularly, but the support was there. Like they knew I wasn't, playing Minecraft in my office.
You were being
productive, working hard and trying, So I think if you have that understanding as your family and they understand what you're doing as well, it really helps.
It does. And there's a lot of adapting to scenarios and just overcoming them. You know, like not going backwards is really important to me. So it's about how do I take that next step forward and also learn from the things I'm going through. And that's where, I guess for me, one of my core values is gratitude. So I'm real, like I always practice it daily because I know that the more grateful I am, the less suffering I'm actually going to be mentally, because I'll just see the light instead of the darkness I'm going through.
That made some great insights there, and thanks for sharing that.
That's
the mindset side of it particularly. And going back on, I guess, as we're wrapping up, heading back into the investor landscape, what are maybe one or two tips you'd give to some investors who are ready to get going? They've been sitting on the fence for a while. They can see the market's heating up. It's spring. What should they do to get ready?
I think it's really important to make sure that whomever you're working with, they're working in the best interest for you as well, and also understand the market and finance and how it works. I think it's really important to lean on experts, but also have an idea of what's happening. Because at the end of the day, it is your debt and it is, it is your strategy, it is your plan, it's your retirement. Like just take ownership of everything that's happening. And if an expert gives you advice, think about it, process it and be like, maybe I don't agree. So ask your questions, don't just say, I'm just going to go with the flow because they told me to. It's like, ask the right questions and make sure that they're working for you, and in your briefs. And if, for example, they bring you a property that you don't like, instead of complaining, ask those questions and say, like, just be upfront because they're there to help you at the end of the day. And if you're not communicating, it's going to be very hard. It's going to be a lot of friction. So from that perspective, I think that's important, but also from a value perspective, like you got to do your valuations with different banks and understand where your equity lies and with which bank. I think one of the biggest traps or investment killers is interest rate. I think a lot of people focus too hard on interest rate, and being a strategic broker, I talk to my clients about interest rate a lot, especially when they go, what's the best rate on the market? I say, just because the rate's the best on the market doesn't mean that lender or that product is the best for you. And then especially with investing, if they're going to their main bank, they're not getting a good valuation. And I've got something here a little bit better.
Yeah.
Why don't we tap into that equity? Might be a slightly higher rate. And then it's about projection. So what does this forecasting look like? You might pay extra X amount here, but then your growth here is X amount. So it's like, all right, well, does this line up with your financial goals for retirement? So talking about that too. That's why I'm really big on strategy, so that I can make sure that we map out that roadmap blueprint for the client long term.
Yeah.
So that for buyers, agents, and just anyone in the field, it's a lot easier for them because, like, I think finance is the backbone of property, and with a good finance expert, you'll be able to navigate those waters really well. And then obviously makes your life easier, because for me, it's all right. If you buy one, how do you buy two? How do you buy three? What does that look like? Do you want four? No. All right. Well, do you want two? How do we plan for that?
Yeah.
Everyone's circumstances are different. Everyone's scenario is different. I think it's all about tailoring and making sure that everyone's on the same page as well.
Yeah. No, thank you. Great tips. And mate, thanks for sharing your insights personally. It's quite inspiring, and also a lot of nuggets for our investors listening today. And mate, I have no doubt success will continue to follow, and I look forward to watching you reach for the stars.
Thank you. Appreciate it.
Catch up
Thanks
again
for having
soon.
me.
Thanks, Rom.
If you enjoyed the show, it'd mean a lot if you could take a moment to rate and review it on your favorite podcast platform. It really helps us reach more listeners like you. And don't forget to hit subscribe so you never miss an episode. The Invest Smarter, Grow Faster podcast provides general information and commentary about property, finance, and investing. It does not constitute financial, legal, tax, or investment advice tailored to your personal circumstances. Before making any financial decisions, you should seek professional advice from a qualified advisor. While we aim for accuracy and quality, we cannot guarantee all information is complete, up to date, or free from errors. Past performance is not a reliable indicator of future results. Thanks again, and I'll catch you next time.